And welcome to another Smaulgld live stream. Today is Thursday, July 12th, 2018. And we meet at this time every night at 8 o'clock Eastern Central Time. Tonight's topic is, are gold miners going bankrupt? But before we get to our topic, let's take a look at the markets. Gold closed at $12.45, silver $15.93. Both were up. Silver was up about 15 cents, and gold was up about $5. Platinum was up about $18 to $839. Palladium was up a bit, and the stock markets were also up. The Dow Jones up 224 points, Nasdaq up 107, S&P 500 up 24. Each of them gained about 1%, with the Dow Jones up about 0.91. Nasdaq up 1.39% and S&P up 0.87. S&P closed just shy of 2,800. Nasdaq at 7823 and the Dow Jones at 24,924. So the markets are rebounding. Precious metals markets rebounding, and on the crypto side, they were down today, but they also have rebounded as the day went on. Bitcoin had fallen all the way down to in the 6100s. It's currently at 6250. Bitcoin Cash also had fallen. It is now at 680. No, what is it now? It's 687. And Ethereum had fallen down to about 424. It's now at about 430. And Litecoin had been down in the 75 range, and it's now at about 76. 64. And what else happened today? Well, last night, following on from Trump's, demands on NATO, there was a NATO dinner in Europe, and the big interesting thing that happened there was Jean-Claude Juncker, the president of the European Union, was seen in multiple photos and videos staggering about, seemingly drunk, although one could say he might have had a condition. Who knows? But did not look good for him. Also today we had the Peter Strzok or Strzok or whatever you call him, the FBI agent who is in charge of both the Hillary Clinton email investigation and the Russian collusion until he got kicked off of it. No, actually he was in charge of that, and then he was on the special counsel with Mueller until he got kicked off of it. And so he appeared before the House today in front of Chair Goodlatte and Chair of the House Judiciary Committee and Trey Gowdy. And it was basically a partisan show where you had the Republicans basically reading his text messages back to Lisa Page, his paramour, and also a lawyer at the FBI about bias. Strzok gave his defenses, what he meant. He didn't mean any harm when he said he called Trump supporters hillbillies. He basically went through what he said and had an excuse for everything he said. So when they asked him, what did you mean? You would stop it. What was the problem? And he said, I was very upset that Donald Trump had said something against a Gold Star family. It was despicable. He's a horrible person. And his whole demeanor was one of, I have bias, and that's part of human nature, and under the Hatch Act, you're allowed to have bias, you're allowed to have political opinions, but you're not supposed to let them affect your work, and I never let it affect my work. That's basically what he was saying the whole time. It got heated one time. It got heated when Louis Gomer, I think is his name, he started calling him a liar and saying, did you have that silly smirk on your face when you lied to your wife? And then the Democrats started yelling, point of order, out of order, this is crazy. So it was a bit of a sideshow because people didn't get, I don't think it got much out of it. The Republicans yelled at him and the Democrats yelled at the Republicans for yelling at him, and it got as far as one of the Democrats, name was Cohen, said that Peter Strzok should be given a purple Medal of Honor for his service. And that, of course, enraged more people. So that was the show today, but not much I think, in the way of any substance. The one thing that did come out of it was Chair Goodlatte did tell Stroke that if he did not answer questions, and Stroke was saying, I don't have to answer them, the FBI lawyers told me not to answer these questions, that he would be held in contempt. And we'll see if that goes anywhere. Meanwhile, his lover, Paige, was supposed to show up yesterday, and she just didn't show up. And so they're saying that by tomorrow they're going to draft up contempt of Congress for her, too. Now, remember, I think Eric Holder was held in contempt of Congress. I don't know if that means the same thing as it used to mean. I think in the old days, if you were held in contempt of Congress, they would send officers out, get you, and throw you in a dungeon underneath the Capitol building. I don't think they do that anymore. All right, before we get started, we got a comment. Silver Fortune just checked out your Patreon levels of support with a smile. Now, I am very pleased that I have them. I think there's about 12 of them. It's very nice of the people that do indeed donate each and every month to the Smaulgld channel and Smaulgld website. Thank you for that. All right, so now we're going to get into tonight's topic, are gold miners going bankrupt? Now, before I get into that topic, and you know how I am, I like to be thorough with all these things. I don't just pick up a piece of information and start yelling game over and game changer and look at this and trying to give real importance to a piece of information. So I have a quote here, and some of you may be familiar with it, some of you may not. You'd have to probably be an English major to know this one, or just, it does get mentioned once in a while in popular culture, but I wouldn't say it's a very common quote. This comes from an essay on criticism from Alexander Pope back in 1709. And I'll read, "A little learning is a dangerous thing. Drink deep or taste not the Pierian spring. Their shallow draughts intoxicate the brain, and drinking largely sobers us again." I'll break that down for you, because I think this is a perfect example, this paragraph, of what happens in the news, how people react to it, and certainly in the precious metal space. So when he says a little learning is a dangerous thing, what does he mean by that? Well, people get a little knowledge in their craw, and it's game over, game changer. And I've got an example, a real life one from today. And he says, drink deep or taste not the Pierian springs. When he says drink deep, he's saying just don't learn a little bit, learn a lot. And he says, or taste not the Pierian springs. Now, you don't need to know what that is, but I'll tell you what that is. That was a sacred spring in ancient Macedonia. It's a Greek reference, believed to be the place where you would go and get your fountain of knowledge. But putting that aside, he's saying a little learning is a dangerous thing. Drink deep, or basically don't bother. Because there, if you have shallow drafts, a little bit of learning, it'll intoxicate your brain. Aha! This is what's happening. Game over. Game changer. Gold 50,000. SDRs. COMEX default. Whatever the pumper narrative is based on the fact that they're giving you a little learning. It's basically it could be a true fact, but just that it's cherry picked. And then it says, and drinking largely sobers us again. So if you take, what I try to do is not give you a little learning, but actually to allow you to drink deep, and then you may take a more sober look at some of these stories, like gold back yuan, game changer. All these stories, if you look at them more deeply than just the quick bit of information you get, and then they draw an immediate conclusion, and that's the shallow draft that intoxicates your brain. And then you need to drink largely, and that will sober you again. Well, let me give you an example here. So yesterday, and people, they have it in their head now because they've heard this stuff. I got a comment today. It's a public comment, and it says gold supply is drying up. All right, and there is a source to that. It is a Russia Today article, but it's sourced out of Reuters, and they're quotes from some of the quote experts. And there's nothing in this story that isn't true, at least to my knowledge. And it says that the people responsible for supplying the world with gold are sounding the alarm. Now, the alarm they're sounding is that the discoveries are going away. They've gotten most of the low-hanging fruit. They're not finding new deposits. They've got aging mines. It's the peak gold argument, and there's nothing in it that would allow you to think that that's nonsense, because there is a limited amount of resources on the earth, and you could basically mine them out of existence, or you'd have to go and do different type of mining, more expensive mining. So there's quotes in here from CEOs of gold fields, another company called Seabridge Gold. He's talking about peak gold. It's a new reality. Reserves being mined faster than they're being replaced or found. We used to have increasing gold mine production every year. Now that's not happening anymore. And it's interesting because I think they said 80 or 90% of the world's gold that's above ground now has been mined since right after the gold rush. So it really has been a tremendous century and a half of gold production in the world, and it can't go on forever. And so this is all true. Barrick Gold, #1 gold mining company in the world. President there said falling grades and production levels, lack of new discoveries, extended project development timelines are bullish for the medium and long-term gold price, meaning that we're not going to be getting as much probably out of the ground, and in the coming years and decades we'll be producing less and less. And then Gold Corp says, if I could give one sentence about the gold mining business, it's that in mine life, gold produced from mines has gone up pretty steadily for 4 years. Well, either this year it starts to go down, or next year it starts to go down, or it's already going down and we're at peak gold. All right, so now you've learned something. You've got a little knowledge, and I would argue that is a dangerous thing, because from that, all you're going to say now is, game over, we're running out of gold, the sky is falling, what are we going to do? There's no more gold coming out of the ground. It must mean the price of gold is set to skyrocket. And no one knows this but you, because you read this article, you're in the know, you've got a little knowledge. All right, so then the conversation in the comments went, the follow-on statement was, gold mining isn't profitable and supply is running out. Do you honestly think the miners will continue this way? Now you see, with that little bit of knowledge there, the supply is drying up. And now mining isn't profitable and supply is running out, and there's actually truth in gold mining isn't profitable. And I'll explain. So I wrote, gold mining is profitable. If you look up the majors cost per ounce, it's under $900 an ounce, or most of them. I put all, but it's actually most. And also, here's the kicker. Annual gold production only adds a small single-digit percentage of the gold to overall above-ground stocks. Does anybody know how much gold is mined in a year and what percentage that is of the overall estimated gold stocks? I did a quick calculation, and it's between 0.8 and 1.4% annually. So even if they start slowing down the production and eventually dry it up, there's still all that other gold there. We'll get back to that in a minute. So this is the mentality, as you've now realized the gold supply is drying up. That leads to no more gold, and gold miners are not profitable. And the article quoted for that was an article from the Citizen in South Africa. It says, most South African gold mines are unprofitable. And it goes through how they're old and they don't make money. All true. So now what the person has done is they have indeed given me two pieces of a little learning. They're showing me that these guys that run the mines, they're in the know. They're telling you they are basically not going to be producing as much gold. They're running out of their supply. And the South African article says they don't even make any money. Well, now you've got this little learning is a dangerous thing, perfect storm, and there the shallow draughts intoxicate the brain. Now it's game over. We're off to the races. I know this information. we're running out of gold and they're not making any money. And then the question was, do you honestly think the gold miners will continue this way? Now what we're saying is, there's not even going to be miners anymore. They're not making any money, and then we're going to run out of gold, and of course gold is going to go higher. And I said that this is pumper talk, and the response was, these aren't pumpers, Lewis. It's the industry itself. See for yourself. And then we cite this prices are going up, and your 900 cost figure is way, way too low. And then he cites the South African article. Well, if you look further, I wanted to test what's actually happening in the gold miners, what their average all-in sustainable cost per ounce is. And I also knew there's an issue with South Africa. South Africa, the industry has been decimated. It was once the crown jewel of the mining industry. It's now a shadow of its former self. South African gold mining production has fallen nearly 90% since 1980. I think Steve Stainangelo did a good article where he was talking about how much gold South Africa used to produce. Well, they don't anymore. The issue is not gold mining. It's the issue for South African mines not being able to make money is because it's South Africa. And they have spent most of their reserves. They've had strikes. They have inefficiencies. South Africa, I think, is 6th or 7th now in the world in gold mining production. It used to be first, far and away. It was the Saudi Arabia. It had geopolitical importance at the time during the Bretton Woods Agreement. In a sense, it was the country that the Western world counted on to produce gold or to produce the money supply because they needed to have extra gold in the system because they weren't raising the price from $35 an ounce. So they needed South Africa to pump it out, and they pumped it out. And they're pretty much pumped out. All right. So then I wanted to take a look, and I realized that South Africa was an issue. But that story is true. That's the little learning. It is true. South African mines are largely unprofitable. They don't have a cost figure of $900 all in sustainable cost. So I did some research. Now this is the part where you want to move beyond the little learning and you want to drink deep. And I wouldn't say I drank deep, but I took more than just a little sip. But this type of drinking largely sobered me, and I was already pre-inclined, because I knew most of this, not to believe this gold supply is drying up and miners aren't going to continue, they're not profitable. I happen to know that's not true, but I decided to get the background information, and here it is. So let's take a look at the top 5 or 6 gold miners. Barrick is number 1. Public information in their SEC filings, sworn by their entire management team under penalties of perjury and jail time if not true under the Sarbanes-Oxley Act. Barrick states that their all-in sustainable cost per ounce of gold is $765 to $815. So right there, that number sobers you. That's information that doesn't square with game over, game changer, gold 50,000, running out of gold, unprofitable gold miners, can't carry on. No, this is Barrick's number 1. Around the world, their gold miners have a range of $765 to $815. Number 2 gold mining company in the world, Anglo Ashanti Gold, has a 1,050 average ounce per average all-in sustaining cost. And guess why their average is higher than Barrick's? They have 2 South African mines with average costs of $2,242 an ounce and $1,593 an ounce. So that little learning about South Africa, totally true. It is true. Mining in South Africa is largely unprofitable. But that doesn't mean gold mining in general is largely unprofitable and that Barrick's is not going to continue. Why wouldn't they? If they get it out of the ground for an average of $800 and they're selling it for $1,250, wherever it is right now, they're going to carry on. Goldcorp, average all-in sustainable cost, or AISC. Now, let's go step back and tell you what all-in sustainable cost is. An extension of what you call cash cost. And it's somewhat of a minor way of, they try to all use a similar methodology to figure out how much things cost. It's not a gap measure. but it includes additional costs and how much it's going to cost to produce gold over the life cycle of the mine. And then they figure out an all-in sustainable cost. They have no interest in making that. Well, they might. They might want to manipulate that number lower if they want to show more profits. But the point is that they can't manipulate it for too long, or if they do, then eventually it catches up with them. So since they publish this number in each quarter, they have to be relatively consistent unless things change. So Goldcorp produced their all-in sustainable cost is $8.70 per ounce. Kinross says theirs is $9.54 an ounce in the latest quarter, and Newcrest Gold says that theirs is $7.87 per ounce. None of these numbers are so alarming. They say they're going to stop mining because they're not making any money. Newmont, all-in sustainable cost between $9.65 and $10.25, they think, in 2018. And in 2019, they expect it to drop to $8.70 and $9.70 an ounce. So what you have there are 6 of them. I think I have one more. Goldfield says theirs is $9.55, which is down in the first quarter of 2018, which is down from 1,017 in March of 2017. So none of them are showing a dramatic increase in all-in sustainable cost per ounce. Now, what about the point that they're not going to stay in business, they're losing money? Well, that's not true either. Let's take a look at the earnings of the top 6 or 7 gold mining companies. Barrick's reported first quarter earnings. These are the most recent earnings. We haven't gotten the second quarter yet. $158 million. Net income 14 cents a share. Well, that's not bad. That's net after all costs, $158 million. They're relatively low margin, these companies, but they're mines. Anglo Ashanti also recorded first quarter revenues of almost $2 billion, and they had free cash flow of about $181 million. Goldcorp first quarter net earnings $67 million or 8 cents a share. That was down from the first quarter of last year. Kinross operating income first quarter $177.9 million versus $48.6 a year earlier. So while Goldcorp had earnings of $67 million versus $170 million year over year, quarter over quarter, they went down. Kinross went from $177 up from $48.6 last year. Both still profitable, no issues there. Newcrest, let's see, they had free cash flow of $134 million. Newmont Mining had net income of $170 million in the first quarter. So you see, the largest gold mining companies, they're not in any dire straits. The dire straits are what Wall Street likes to see, is they're supposed to grow. Well, they're not going to grow if they're going to run out of gold. That's a good point. There's definitely a point where they're ringing the alarm bell that they're going to slow down their growth in mining. They're going to plateau, and then they're going to start producing less unless something changes. However, that still doesn't mean game over, game changer, because as I mentioned, and we mentioned this a few nights ago, the number one use for gold is jewelry. Now, jewelry is not indispensable. You don't need jewelry. You can substitute jewelry to a certain extent. Maybe if you're really rich, it's like a Porsche. There is no substitute. You have to have it. The only thing that gold is required right now is in certain industrial applications. And even there, you're able to switch. Dental work, you don't have to have gold. There's certain electronics where it's preferable, but you don't have to have it. Central banks do not have to have more gold. In fact, the only ones that are adding gold are the ones that have gold mines. Kazakhstan, China, Russia. So they don't have an issue. If they want more gold, they just mine more and they can add as much gold as they want. Maybe not China, but maybe China is done adding to its gold reserves. Well, they have. They have stopped adding to the gold reserves. Maybe the country still wants it, but at some point, it's not it's not like silver. Silver's a different story. Silver is the demand for silver, the industrial demand, can be switched out, but it's still required until you can switch it out. Whereas gold demand is largely jewelry, and you don't have to have it. The investment demand is not necessary. The central bank demand is not necessary. It may make the gold price go higher if there's more people that want to invest in gold than and the amount of gold that's being produced slows down. But remember, by the time that the gold production slows down and starts to fall, there'll be 200,000 tons above ground, maybe even more. So even if gold stops being produced altogether, that doesn't necessarily mean that the price of gold skyrockets. Or if it does go higher, it doesn't have to go much higher. But again, people insist that that's a scenario, that it's already here, that we have this situation where gold miners are just going to shut down. There's nothing in the story that says they're going to shut down tomorrow. The costs are too high. Maybe they'll shut down some of those South African mines, but they're not going to shut down now because the latest reports are all that the gold miners are doing well. Now, you could get into the scenario if the price of gold goes down to 800, 700, 600. Yes, indeed, they will slow the production, and they did that in the silver industry. The primary silver mines actually mothballed a lot of mines. The reason we didn't see an issue with that is because primary silver mines are not the primary place where we get newly mined silver. We get it through other mining of other base metals. So that harmed the silver miners when we had low prices at or around their cost of production. But it never led to any type of shortage because it was silver being mined as a result of base metals. Same with gold. Where you would feel a shortage would be what happens when gold price goes higher for jewelry. The buyers back away and they just don't buy it. So that's what would happen, and then it would drive the price back down because there'd be less demand. Anyway, I wanted to just give you that example just as to show that anytime you hear a piece of information, it doesn't mean that it's game over, game changer, and that there's going to be some significant event as a result that because you have this little learning that you now know something and you can intoxicate your brain over and get all excited. All right, let's take a look at the comments. Silver Fortune was checking out my Patreon levels. We covered that one already. Thank you to those who do work with Smaulgld each and every month to donate a small amount. I appreciate that. Gusta Broken every night threatens not to come, and he comes, even though he's staying up very late there in the Netherlands. What is he saying? If I said hi, if I was still up. So hi, been busy on other streams, writing lots of Moronica. Oh well, doing nothing. All right. Database DNA, critical thinking pumper. S, world running out of gold, there's no substitute. Yes, this we just covered. Experts warn peak gold is the new reality in the gold business, with reserves now being mined much faster than they're being replaced. So I did read that article. There's nothing that in there that's not true. It's the conclusions that people draw from it because they don't put the story in context. And that's not the point of one of these one-page articles, is to give you the whole context. And one thing I also mentioned is these, remember, are the CEOs or the spokespeople for mining companies. Their job is to pump gold. Their job is to tell you that this is the best and the worst thing. It's great for prices because we're the only ones who are mining it, and we're going to run out soon, but get it while you can. They would love higher prices of gold based on a story like that. Why? Because every dollar the price goes higher, that's an extra dollar profit for them. No, they don't have to do anything about it. Falling grades and production levels. Okay, so he's reading what I had read out loud, and yes, okay. The truth and China is just as bad equals USA equals 210 trillion of unfunded liabilities. Here comes the little learning is a dangerous thing. Total public debt equals 19.8 trillion, 3 trillion plus state and local debt. USA equals GDP above 115 and rising. USA equals debt kind of life. Now, if you really want to, if you were really serious about not just having a little learning and knowing that, maybe you would drink larger or drink deep and go through and try to figure out the same numbers for the EU, for China, and for Japan. And then think about it in that context. Divide world debt, now it's good, between M1 or M2 by gold and get real gold price. Only if people want to ascribe a gold price based on money supply. They don't. They haven't for a while. So the insistence that it's somehow going to go there, it's just like when people insist the gold-silver ratio has to go to 16:1. That's also based on a little learning, and that's a dangerous thing because anyone who's been saying gold-silver ratio has to go down to 16:1 has watched it climb from 50 to 80. And there's a reason for that. S, an immigrant cleaning floors for $10 an hour has $1 million mortgage equals that's wrong. Yeah, no doubt about that. There's certain things that are just true. And that one's true, and that is a result of, and that one's easy to point to, that's a result of monetary policy. And monetary policy, as we've learned, is the adjustment of interest rates and the money supply. And it makes it easier for people to buy assets that they otherwise couldn't buy, no matter how rich or poor they are, because the cost of money is lower. So this fiat will die like all the fiats of the past thousands of years. Now that's where you may be wrong. It's the same with gold is money, period. Gold has been money for 5,000 years, period. I like to say to that one is horses are transportation, period. Horses have been transportation for 5,000 years. At some point, sometimes things change. Horses are no longer transportation. They could be, but most people have horses for other reasons. Gold is no longer money, period. People don't use gold to transact. It could be money. It's possible that gold has been superseded by fiat currencies, digital currencies, cryptocurrencies. And the idea that a fiat currency will die, when they used to die, it was different. When a fiat currency died, it went into something else. It went into another fiat currency that was either a fiat currency or went to another currency that was backed, or it went into gold. You don't have those out right now. The whole world is on fiat currency. So that does make it different, and that doesn't ensure that the dollar fiat will die. Now, the reason the dollar will die is not for the reasons you think probably, is because the country may go away. That's the easiest way to get rid of a fiat country. You take away the issuer. So Luxembourg, if it were to be absorbed into Germany, there would be no more Luxembourg, whatever they have. Well, they don't have it, but they have euros. But that's the point, is whatever national currency you have can go away just because your country goes away. And you're right, the country could go away because of debt. But I'm not sure, since we're on a 100% fiat system, that it is a fait accompli that we are going to have the death of all fiat currencies. And some people are insisting there must be a reset, and that reset involves gold. Gold will be needed because it will be needed to give confidence to the system. Well, maybe not. Who wants that confidence in the system? Who knows anything about gold giving confidence to a system? Who's actually handled gold, would even think that gold would give confidence to the system? The people today are not trained that way. The economists aren't trained that way. And during the last financial crisis, did anyone want gold? Did anything happen towards making a gold standard? No, the only thing that happened as a result of the financial crisis was they invented that Bitcoin thing, and that took off. Trump scared about Russia's anti-missiles. This will stop. Okay, gold at least stable. Bitcoin is not. Bitcoin is not stable. Anyone who tries to tell you that Bitcoin is digital gold, Bitcoin is a store of value, it's not. Bitcoin is a speculative digit. That's all it is. The only thing that you can say, and it's not like gold, because Bitcoin is limited to 21 million coins. That's it, period. Gold isn't really limited to any certain amount. They're still mining it. That's what they're talking about. Gold supply is somewhat elastic. Bitcoin is it's speculative. I don't even know how you even say that it's like gold or that Litecoin is like silver. It's not. But it is a superior way to transact than gold, because you can transfer it and people will accept the fact that somehow you're transferring value, and you really can't do that easily with gold. Now with gold money, I suppose you can, but for small transactions with coins and silver, digital currency, the reason credit cards work well, and the reason why the crypto space is looking into credit cards or debit cards is because that's a very easy way to transact on your phone or with a card. And gold and silver, unless they're digitized, they're not good forms of currency. And that's another reason why they're digitizing and putting gold on the blockchain. Okay, now this will help put a stop to the U.S. petrodollar. I guess you haven't been listening to my thoughts on that. First of all, the petrodollar is already gone. It's an outdated concept. The reason the petrodollar helped support the dollar when they got rid of the gold standard was because it encouraged Europeans to stop thinking about trying to get the U.S. to go back on the Bretton Woods standard. It made them have a reason to hold dollars, which was they had to buy oil from Saudi Arabia, and Saudi Arabia was only going to price their oil in gold. They were only going to sell it, only going to price their oil in dollars and only sell it for dollars. And that made countries, foreign central banks, hold the dollar and continue to hold the dollars, even though they couldn't return them to the United States Treasury for gold under the Bretton Woods Agreement. So that was a very clever move, and that created the demand for the dollar. However, the dollar has been, people hold the dollar today, central banks hold the dollar today for far more reasons than just to buy oil from Saudi Arabia. Total oil trade in the world is only like 8% of all transactions. Countries hold U.S. dollar reserves and treasuries for reasons far beyond buying oil from Saudi Arabia. In fact, China has $1.2 trillion worth of reserves because they traded with the U.S. It's got nothing to do with the petrodollar. It's got nothing to do with Saudi Arabia. But even more important is if you do need the dollar to be backed by oil, the United States right now produces more oil than Saudi Arabia. It goes back to the point we were talking about with South Africa. South Africa used to be the big bad gold producer. It isn't anymore. Saudi Arabia isn't anymore. The United States produces more oil than Saudi Arabia and will soon be the world's largest oil exporter. So if you need something to replace the petrodollar, well, you can replace the Saudi oil with U.S. oil, and now you've got the U.S. petrodollar backed by U.S. oil and still backed by Saudi. So that's a narrative. See, people get that narrative in their head. End of the petrodollar. That narrative is about 10 years old, and people have made a living off of selling newsletters off that narrative and getting people to repeat it incessantly to the point where they're not learning anything. They just learned it once. They don't think about it, and they just spout it back. But end of the petrodollar. Women love gold, not Bitcoin. Well, that's the point for the jewelry, Jerry Innovations. The idea is that the real demand for silver and gold is not investment. It's for jewelry. But the real demand, see where Bitcoin might have demand, is in its, people want it for, to transact. If they want it just to go higher, then they're not going to want it when it goes lower. Then there's no benefit in holding a Bitcoin if it's going lower. There really is none. If you're not going to use it, you have it in a wallet or on an exchange, and there it is. What's the point of having it? So it has to have some use. And it has no use if it's not being used or it's not going higher. Israel scared. Message review. Someone must have said something bad there. Oh, we got a lot more here. Okay, hold on. Let's see. See it. Bitcoin 1, Dow 5,000. Did you sell your bill? Who would do that? Sell your gold and that would be tough. Sell your gold and buy Bitcoin at 20,000. I can leave 10 pounds of silver on my front porch. No one take it, but if I have one shiny gold coin, it'd be gone fast. Seems to be. There is something, I don't know what it is, but people are drawn to gold. It's historic. I would say silver, not so much. That is one of those things. I don't know if it's DNA, but it's definitely true. What do you think of Hecla Mining? No, it's an American silver miner. It used to not be as good. I think it's gotten better. It's production. It's got better management, but I don't follow the miners that much. I'll buy Bitcoin at, a lot of people would. Maybe Matt Gox, go to all your Bitcoin in colored Lambos. Do you think we'll go up the next years above 1,400? It could, and you'd have to think of the scenarios why it would. I don't think that just declining mining production from going from increasing every year to slowing down the increase to flattening out, I don't think that'll have any impact, because those are amounts around the margin. So if each year they produce 2,600, 2,500, 2,300, 2,400, 2,200. That's not going to matter. That's going to be a slow dribble out of a slowing down of gold mining. So the way gold goes to 1,400, you have to also allow for no manipulation, no short selling, is just an increase in demand. What somebody mentioned the other day, which is true, that if you did have widespread power outages, people would start to think that running into gold ETFs when the banks are closed and you can't access the stuff, or you can't use your credit card or debit card, that tangible assets would be worth more. So that would be another reason. But the problem with that is it wouldn't stay high, because once that, if, not once, but let's say you had a grid outage and it only lasted a few days, then the price would, people forget about it. It would have to happen intermittently, it would have to happen to a long time for people to get it in their heads that the system of digital is not as stable as you might think. Oh, you're from the Netherlands too. All right. Well, the work that I do is I'm a positive person, but what I don't like is to be given this false hope and this little learning is a dangerous thing and all these pumpers telling you game over, game changer. I can't if you just go back and look over the last year, how many times gold was set to skyrocket, silver was ready to soar, and it didn't happen. There's a reason. Because whatever they were pumping, whether it was gold-backed yuan or commitment of traders, never happened before, sovereign-sized gold buy in 45 days, there's a lot more to the... Even if the story is true, I did a YouTube on this called So What? You have to look at it in the whole context, and then you become sober again. You realize, calm down, it's curb your enthusiasm time. Which commodity index should we watch for multi-year breakout that gold and silver we're waiting for? I don't know if there's that many correlations. I've followed gold, oil. I followed gold, silver. It's hard to say. It seems what's interesting the last 2 years is that gold and silver have been in a very tight trading range. That may just reflect. I don't know what it reflects. People ascribe that there's lack of fear in the markets. They said, well, maybe the cryptos took some of that money. I don't think they're taking that money now. So who knows? You only know after it happens. And I don't really make projections. I look at what's happened in the past. But, you know, what happened in the past isn't always indicative of future performance. Nathan, good to see you. Only have to see gold double twice in my life to become a believer. Owning precious metals is gaming the system. Somewhat. All roads lead to Fedcoin. Possibly. And it may not be the Fed coin that they had outlined that they looked at. It just could be their own putting the dollar on the blockchain. Although some of the Fed representatives said that's not a good idea. I know Sweden doesn't want to do it. They don't want to have all of their money on one blockchain. It's subject to someone coming around and taking control of the blockchain, hacking the blockchain. Well, I think what they like is that they can print money either digitally or by paper, and they have more control over it that way. But I think they do like the idea of the trackability and the ability to conduct monetary policy like overnight by doing that. Look at all of this. We've got all the Dutch on the line here. U.S. petrodollar gone, really? Then why is U.S. still creating conflicts around the world? Totally. Okay, there's a difference between protecting the petrodollar and protecting U.S. interest. Remember what Trump was doing. I'll give you an example. Not only is the U.S. huge now in oil and exports, they're also massive on natural gas and natural gas exports. They export a lot to China. They have these big tankers that can deliver natural gas. What was he doing in Germany with Merkel in NATO? He was complaining that Merkel was buying natural gas from Russia. He sounds like he's willing to blow up the NATO alliance in order to sell oil to Germany, natural gas to Germany, and natural gas to Europe. He's trying to eliminate the trade deficit. So what was in the interest in the United States 30 years ago, 20 years ago, 10 years ago in order to push its weight around may have been to get, to protect the petrodollar. But right now what they may be trying to do is protect the trade imbalances and protect or promote U.S. oil, U.S. natural gas, U.S. products in order to become like the United States was in the 50s and 60s, which was a net exporter instead of a net importer. That's when the dollar didn't need protecting in the same way. So you can't expect that everything is the petrodollar's days are numbered, the dollar's days are numbered. That's just mantra. The world is constantly changing, and the idea is not to protect the petrodollar from the U.S. The idea is to protect the U.S. interest, and that could be done in many different ways. And we saw Trump is basically trying to sell Germany our natural gas by shaming her for doing a deal with Russia. The U.S. petrodollars, you're going to see the flood and flood. See, that's an old narrative too. The dollars are going to come running back. All right. You got to think different. All right. We got a lot of comments here. I'll get to them all if I can. It's only 45 minutes. Does the ratio of gold to platinum matter? Platinum gold is historically low level, but why should there be any relationship between the two? There shouldn't be. But what's interesting is that platinum has historically been considered rarer and therefore more valuable. But it turns out that that's not why platinum was more valuable. Platinum was rare, which made it susceptible for higher prices, but it had a demand for certain industrial components, and also because the Japanese liked it for jewelry. So since there wasn't much of it, and it was rare, went higher. But when the Japanese decided they didn't like it as much as they used to, they don't have as much money as they used to, and then the diesel manufacturing went down, the price of platinum went down. So there is no, these ratios have, I always say that relative rarity is not dispositive, doesn't mean anything. I use the example of my artwork is rarer than Picasso's, so what? There's no demand for my artwork, and that's an extreme example, and there was demand for Picasso's, but he literally made thousands and thousands of paintings. They're all worth more than mine. So yeah, these ratios don't necessarily exist unless somehow there is a correlation between the two. I don't think there is. Platinum and gold don't serve the same markets. There's very little overlap in their monetary. People don't, they only used platinum coins in the 19th century for like 20 years in Russia. They weren't that widely held. So there's not really a monetary history. There's some jewelry overlap, but so I don't think there is. Although what you could say is platinum is undervalued because it's at this ratio. That's a fair enough thing to say, but then you have to look at it and say, why is it there? And can it go even lower? Nathan Chandler. Let's see. Damn it, every time I use a card company gets a cut. Burden on small businesses. Same with all digital solutions of wealth. Well, anytime you buy silver, they take a cut too. I mean, when you buy silver rounds from a dealer, someone who makes their own, they mark those up. If you buy American Silver Eagles, the authorized purchasers have to pay $2 over spot per coin. So minting of coins, same thing. There's always someone with their hand out. And that's what they say with if you can get the Bitcoin or the Litecoin, that your transaction costs are reduced. US equals fracking equals loses money, is debt-driven, soy oil comes easily. Yeah, but Saudi oil is also running out, too. And remember, even if it loses money, let's just, do a thought experiment. If the United States thinks it's in its national interest to produce fracking and have it lose money, don't you think they'd bail those companies out? Because if you think they would go and bomb countries to protect itself, I don't think bailing out countries, companies that have a strategic interest because they produce oil would be too much of a stretch. Okay, now Gus is speaking Dutch. You hold inside your safe or worth something regardless of what happens outside. Not necessarily. Value is only what somebody else is willing to pay for it. If no one wants it, then it's not valuable. And that's another thing people think, that nothing can, whatever you have can't go to zero. I think Chrono Trigger man said this. He said there's a lot of things that can't go to zero. That doesn't mean they're good investments. I sold gold and silver, Bitcoin and Litecoin. I don't know if that's smart. I don't know. I don't give investment advice, and I don't even know what the right answer is. I just think that people lock themselves into narratives rather than thinking them through. And the reason, the way I think isn't good for investing is you probably wouldn't do anything. You'd think yourself into a corner and you wouldn't take a move. But that might be good because then you wouldn't lose money on investing in stuff. Oh, Shea Greenfield, good to see you. Up late in Israel. I think Lisa Page refused to obey the subpoena to show up in front of Congress yesterday. Yes, so she can watch Peter Strzok's testimony publicly today. I think what she was worried about was she didn't want to say she didn't want to contradict what he said, not knowing what he said. So they figured at least if he goes out there in public, she can watch it. Good Ponzi move, Chris. Yes, coordinated story. I agree with that. That's exactly what she did. And now that he has basically given his excuses as to what he said, she can say, oh yeah, that's how I interpreted it too. You're never going to prove intent from those things. They stand on their face. If you're against those guys, you'll read into it the worst possible thing. If you're against Trump, you're going to think that these two people were heroes. They didn't mean anything by it. Leave them alone. Do you invest crypto, equities, gold, and silver? What skin in the game you have? Curious. I enjoy your realistic opinion or commentary. Well, actually, I don't have much of all. I mentioned a while back, I bought a house, so I don't have big skin in the game where I know what people do. They go online and they're pumping a particular coin, or they're pumping gold or silver because they have it and they want to go on and they want to promote it. And that's not the purpose of this. The purpose I started this channel wasn't to promote whatever I owned. Was I'd gotten caught up in listening to all these stories of Game Over and Game Changer, and I saw that they weren't panning out, and I wanted to know why. And I had the blog as part of I was doing real estate consulting at the time, and I had extra. I couldn't write about real estate every day, so I started researching on my own the gold and silver. So I'm not promoting cryptocurrencies or gold or silver or real estate or any asset that I may own. And I'm not active trading stocks. I'm not active trading gold. I'm not active trading silver or anything. So I have some of the aforementioned, but not in amounts that are going to change my life, unless they go to like $4 million an ounce or something. All right. Again, he who makes the gold makes the rules. What is that? That's like old fairy tale talk. What does that mean? Well, I never understood. So right now, in the other fairy tales, United States has no gold. United States, it's all gone. How do you know that? And if the United States is such a big, bad country that can do whatever it wants, why wouldn't it have more gold than it has? If being the #1 superpower in the world, then why wouldn't, according to he who has the gold makes the rules, why wouldn't they have the gold? That doesn't make any, none of that's logical. They want to believe the U.S. runs over the world, slipshod, does whatever it wants. But then somehow it doesn't have any gold. But you need all the gold to make the rules. Well, think that one through. That doesn't make a stitch of sense throughout history. But again, maybe it doesn't anymore. Maybe you've learned something and you've stopped learning. Maybe correlate production levels with the fact that most gold is saved instead of used. Yes, but gold is also dishoarded when the price goes higher. So if you have less gold coming online and then the price rises as a result, they always say the best antidote to rising prices is rising prices, because now more gold will come in and then the price will go lower again. I'm not worried about, I don't think it's the end of the world, meaning that it's a great thing that if eventually they stop pulling gold out of the ground. I don't think that's going to make that much of a difference, because there's going to be a lot of gold that's available. And the thing about gold, unlike somewhat for silver, is gold is not thrown away. Gold is not... they say that just about all the gold ever mined, other than the stuff that was lost, not by accident, but through a natural disaster like a shipwreck, and even that they managed to go and get it. So there's going to be gold above ground if people want it. Remember, they don't need it. That's the key thing with gold. It's not a required commodity, not at the price that it is, and not at its rarity. With major car companies going to be electrical and making statements like by 2040 there will no longer be gas engines on the road, do you think the palladium will be unnecessary as an industry demand? Well, they're saying that about platinum. They're also saying there will be a demand for silver. Not because of the because there's just some silver in the connectors in the electric cars, but not because they're... But what might happen is a lot of the electric cars are going to be lithium ion batteries, and that's not a silver component, but there's also a silver zinc battery. That if they ever run out of cobalt or lithium, then maybe the cars of the future will have silver zinc batteries. Chrono Trigger fan, hello. The St. Louis Fed argues logically that a blockchain is a hindrance to the type of cashless model the banks are looking for. Depends on the blockchain. If it is a decentralized blockchain, they might as well go to a gold standard because they can't conduct monetary supply on a centralized blockchain with a limited issuance coin. On a decentralized blockchain. On a centralized blockchain, they can control the money supply and they can conduct monetary policy in a cashless way whatever they want, and they can turn people off of the system, they can track what they're doing, they can know exactly how much money's in the system. But if they were to move to something like Bitcoin, that type of blockchain, they'd have no control over, and everyone would see what they're doing. They really couldn't do much other than without increasing the price, because they'd have to go in the market and do open market operations to buy Bitcoin. It just wouldn't work. Whereas, thanks for answering. I really hope gold will rise at some point because I own both gold and silver miners and physical metals. Thanks again. Well, what most people tune in for is they want to hear confirmation that gold is set to skyrocket. Gold is ready to go higher. I think it makes it easier for me as not being, heavily invested in this stuff, that I can look at it dispassionately. What I've learned over the last 10 years, and anyone could say this and it'd be a fact, is if you had done what the Fed had told you to do, which was buy stocks and real estate, you would have made a lot of money. You could have bought all the dog excrement companies on NASDAQ, Zillow, Tesla, Amazon. I mean, when I mean companies that don't make any money, but still they go higher. Let's call them unicorn stocks. All those companies, they all went higher. Netflix, if you bought real estate in 2010, 9, 11, even 12 or 13, all based on monetary policy. All right. Russia, you go, the Russian-China story. I've nearly completed a massive pipeline, much cheaper than U.S. liquefied gas tank. Okay. That's fine. Russia has a deal with Germany. So, no one is saying that Russia won't do well or that China won't do well. But this idea that China is going to crush the dollar. I don't know. Sorry for talking Dutch. Dank u wel. Gus the Broken. Good night. Chrono Trigger fan. Chip and Pay, Apple Pay are both vanilla distributed databases. They are far faster and more scalable than blockchains. Oh, okay. Because you don't have the verification issues that you have on the blockchains. Electric cars need no catalyst store, less demand for palladium. That's right. The U.S. interest. Secretly bomb Iran, which is now hard at Russian 400s. Yeah, Russia's wonderful. We got to remember Russia and China, both of them. They're going to crush the United States and end the petrodollar, end dollar hegemony, gold 50,000, because the world would be better if we were all working for the Russians and the Chinese, because they're smart. They understand gold. Blockchain is a terrible idea and makes fraud more difficult. That's right. That's exactly why they don't want to do that. Bail out U.S. fracking companies. What you a commie, huh? Not me. I just know how governments act. All right. Tariffs work. Yep. All the countries on Earth use tariffs. That's right. All the United States is doing is trying to equal the playing field by counter-tariffing. Canada's biggest importer of U.S. products, and the U.S. is trying to hurt Canada's economy. I heard real estate agents made bad money, have to get a second job, maybe cleaning dishes. I think, and I know a little bit about this, that real estate agents are the same as in many industries. It's like the 80-20 rule, maybe the 10-90 rule. Most real estate agents don't make a lot of money. Maybe half of them or 60% of them aren't even full-time real estate agents. Most of the work goes to the big brokers with what they call top producers, top agents. So yes, your run-of-the-mill real estate agent won't make much money, but one who's doing well will do really well, and they can make well over six figures and even higher, especially if they're working in high cost areas like New York or Boston or San Francisco. Kareem, thanks for answering, brother. Love your channel. Thanks for joining. Because Nixon stopped every country in the world from claiming gold for the debt dollar that way. Yes, but you know what he did? What they did since then? Every country's now on a debt euro, a debt yuan, a debt yen. The whole world is based on debt-based fiat currency. Focusing just on the U.S. that's a little learning. You're not getting the full picture. The whole world is on QE. It's on fiat. It's on zero and low interest rates. The U.S. is not even on zero or low interest. They're at 1.75. So just keep focusing and talking about debt, debt, debt. The whole world is awash in debt. And the whole world is operating in the same conspiratorial way to buy each other's debt and just keep extending and pretending that there's not an issue and that they're going to get paid back and that the debt instruments that they hold on their balance sheets are assets. As long as they all believe that, they are, until they don't. Okay. All right. I think we're almost done here. I hope Musk has a good time on Mars. Yeah. There's some good comments there, S. Thank you. Chrono Trigger ran. Centralized blockchain equals distributed database. There's really no incentive for banks to replicate technology that already exists. That's right. I mean, just putting it on blockchain, it's just moving it to a different technology, but there's no real benefits in that. I know people with only high school education making over $200,000 in the oil industry. Yeah, and I saw that as at some point they're saying those jobs will go away, but at least for now, they're making huge money, and they might make it for a few years. All right, that's why Bitcoin is good. I think we're going to wind up here. I want to thank everyone for staying with me all this time, and we will see you again tomorrow night. If you have the time, drop by. So thank you very much, and don't forget to order your mugs. I will do another mailing on Saturday. I will mail out another set of mugs. We still have the classic and super classic. When those are gone, this is mini muggage time. I'm going to move to another couple of different designs, and you could check out those, but we still have some of the original ones left. Thank you very much for listening.